Good morning to all, wherever you're watching us from today. We're finally going to see where gold and oil could be heading today or for the days to come. We've had a quiet trading session yesterday, as everybody is expecting to hear from Fed tomorrow, and also have some Brexit developments in the UK, and that has kept gold in a range. However, oil moved higher again, hitting a 4-month high this time, as demand for WTI increases. This is Stavros Tusios, and this is our daily market insights video that is provided to you by Orbex. Note that losses can exceed profits, and none of the recommendations here constitute investment advice. Before we jump to our charts, let's quickly have a look what we're expecting today on the calendar. We have the employment data coming from Britain. Not as major, geoeconomic sentiment indicator, and later in the session, factory orders from the US. Now, I want to go straight to our charts and start with the gold daily chart. We've looked at gold for quite a few sessions over some past daily market insights videos, because we were expecting, after this impulse wave ends up here, we're expecting the bearish cycle, the bullish cycle, to finish a little bit lower. Now, is this going to be the case? We don't know just yet. We have some signs showing that markets are a little bit bearish, but also have contradicting signals that show us that markets, there is some bullish bias. Now, the bullish bias could just be this move to the upside around 1312, and from here, now there is different scenarios what we can expect to see. One is for prices to move all the way up here and create a range. Okay, let me delete. The other scenario would be for prices to go just a tad higher and then break below, where a confluence level around 1230, 1253 is set there for bulls to start stepping in. Let's have a look what happens on the 4-hour chart. On the 4-hour chart, we have some indeed bearish signals also supporting this decline over here. And now we are actually forming an open triangle pattern. Okay, now from here we could see prices going all the way up to E, where we'll have a retest of the previous trend line around 1332, and then head lower for a break below that level. We would expect some support signals from the MACD and RSI indicators, or this could turn out to be a head and shoulders pattern. So in that case, we would expect prices to fail moving higher up and start declining from here, with the first indication expected to be seen on the break of this level. Okay, and then of course this one. Now let's go a little bit closer on the 1-hour chart, and then we'll jump straight to oil. So we have had the ABCD waves forming. We are expecting for wave E. Are we going to see it? Is still unknown. Why? Because we are sitting in a minor ABCDE formation as well, which means that this might be a level where prices turn. We want to see this level first breaking, then this level breaking, and then of course the very strong support around 1285 breaking, to see whether prices are going to correct lower, where we would be expecting for bulls to start stepping in. So scenarios here, prices get rejection here and move down, or we move all the way up to retest this trend line and complete wave E of this open triangle formation. Now let's go quickly on the oil. Oil has hit a 4-month high, as we said. We've looked at the oil last week as well. We are expecting, that's like an extension here at 60, around 60, 61 level. So we could be expecting prices to move a little bit higher to complete the impulse wave and then start moving lower, where we can see a correction, or where we actually see where we can start receiving some further clues. Now, we are getting some supporting signals on the MACD histogram against prices here, some bullish hidden divergence and bullish divergence. And this is why we could be expecting prices to move higher. There is a break above this previous high, okay? And what we want to ideally see is prices moving higher, while at the same time the RSI and also the MACD are showing some bearish signs. Let's go quickly down at the 1 hour chart. On the 1 hour chart, we are also saying that over the short to medium term, wave 5, the end of this impulse wave, also is expected to reach around the same confluence level as the larger wave, around 60 or 61 level. So this is the magnet zone that we're looking to for bears to start stepping in. And from here, as we said, we expect prices to start moving lower. Now, this is the first barrier that we want to see breaking because it's a strong resistance and a strong activity level. So as long as prices trade above this trend line, okay, we can still expect the oil to move higher. So our first sort of indication would be prices moving higher, receiving a bearish signal and breaking below this potential level that would connect these two lows, and then break the second one, then the support, and move all the way lower to break potentially this level for a deeper correction. I would pay attention to gold because we're expecting the Brexit updates to come out today. Mrs. May was rejected to have another vote because she pretty much is going to submit the same plan. So we are expected to see what's going to happen on that end today, and gold might be affected depending on the news. And also we are expecting the API stock inventories for the oil. So thank you for watching our daily video. Feel free to subscribe to our channel, stay updated about the markets, and don't forget to visit our blog because this is where we cover the latest news, we publish trading ideas, and provide you all the necessary tools to serve you responsibly.